As we come into the end of 2024, it's natural to think about what are some great ways to save on your taxes. I would like to give you my top 7 easy to do ideas for saving on your taxes in 2024. And starting with the least of them, number 7 would be to give a donation to charity. Now, assuming you normally would give donation to charity, give them a gift of cryptocurrency rather than cash. Why? Because the gain is not taxed to you. So you bought an asset, say at $1,000, and now it's worth $4,000. If you were to cash it out, you would then have tax on that $3,000 of gain, and then you'd still be giving it to charity. So a smarter thing to do is to simply give that gift straight to the charity without cashing it out. Let the charity cash it out. You avoid the capital gains tax. They get the benefit of a bigger donation. So that's a great idea. Idea number 6, gifts. This would be gifts to friends, relatives, and others. You are allowed, it changes every year, so it's approximately $18,000 of a gift to a person in cash. And you could give it to them in the form of cryptocurrency, not a problem. And that $18,000 is not taxed to you, nor is it taxed to the other person. If you go in excess of $18,000, then you have to file a gift tax return. It's an ugly form to have to file. It's not really an additional tax until later on in life, but that's something to do. And if you're married, both you and your spouse can give an $18,000 gift to the same person, a child, whatever. And that's a great way to reduce tax. It's also a great way to save money for future things for a child. Tax saving idea number 5, tax loss harvesting. And I will say that tax loss harvesting is when you take a crypto asset that has become worthless and you get rid of it. And you basically reap the loss that you've experienced. Now, it's not fun to lose any money, but those losses can be used to offset the gains when you're calculating your net gain at the end of the year for tax purposes. The IRS has come out and made it very clear that you actually have to dispose of that asset. It's not good enough just to simply say it's worthless. There are sites out there where people will buy near worthless assets, and they'll give you, pennies. And that's all that matters. You just need to get rid of that thing in order to claim your tax loss harvesting. So that's big. That's a great idea. Everybody has losers. Great time to get rid of them. The variation on tax loss harvesting is with what the IRS sometimes calls a wash sale. A wash sale is where I sell my loser. It doesn't have to be worthless, but I just sell a loser in the year and then I buy it back at a lower price, but I've reaped the loss to offset other gains. Now, that is kind of a short-term strategy in the sense of I'm basically I'm increasing my gains that I'll experience in future years. But, harvesting that as a wash can be very useful. Tax saving idea number 4. This is one of the big ones too. Take advantage of long-term capital gains. If you hold an asset for more than a year before you sell it or dispose or transfer it, then you benefit from long-term capital gains rates, which are typically 15%, going up to 20% if you're in the $500,000 income category, as opposed to short-term capital gains rates, which are between 22 and 35% for most traders. So take advantage of long-term capital gains. Now, you might be just a high-frequency trader holding things short-term. Well, that's what you got to do. Number 3, and it's not necessarily so easy, but is to live in a state where there's no capital gains tax. There's about 9 states, more or less, which have no income taxes. So they will not be taxing your income. If you live in a state like California, that capital gains tax is 13%. It's almost as much as what the federal government's taking. It's in that neighborhood. New York, also a very high tax state. You can put your foot down by moving out. Now, that's not something that's easily done, but it is a great idea for long-term planning. My number 2 idea, and this is very significant, it's only for this year, 2024, is that the IRS has announced a change in how cost basis is being calculated starting in 2025. Cost basis determines how much your gain, your tax, and everything. Now, there is a transition plan, sometimes called a safe harbor plan. If you don't take advantage of it, you will end up paying more in taxes, more than likely. And it's very easy to take advantage of it. You can go to our website, CryptoTaxAudit.com/1099, and you can fill out a form. It's no charge, it's no cost to you, and you get to document the fact that you adopted a safe harbor plan before the end of 2024. If you watch this video and it's 2025 already, this option won't work for you. But this is a very important thing, and we'll also, when you sign up, give you emails explaining what to do next. The number one idea on how to reduce taxes in crypto is move to Puerto Rico. That's right, move to Puerto Rico. Now, you need to be in Puerto Rico roughly 6 months for this to take advantage. So this is probably a plan for you to think about for next year if the market's going up. And this is a complicated strategy, very important. But generally, if you're in the neighborhood of having, let's say, $2 million in assets in crypto, you might want to start thinking about the Puerto Rican option. In Puerto Rico, when you take advantage of their incentive plan called Act 60, then your capital gains that you earn while living in Puerto Rico are not subject to taxation in Puerto Rico, nor are they subject to taxation in the U.S. Now, there's a lot of subtleties, a lot of complexities about this. It's not something you do trivially, but it's a massive way to eliminate all taxes and to enjoy a little bit of island life. So there you have it, my top 7 ideas for reducing taxes.